but wealth whispers. And after 7 solid episodes, we're about to have some serious financial conversations for the last time this season. It's time to turn financial knowledge into cold, hard cash. I'm your host, Jay Onair, and this is the hottest finance game show on television, InvestBeta Season 2, brought to you by Stanbic IBTC Asset Management. It might be the final episode of the season, but the rules remain the same. 3 brilliant contestants, 3 intense rounds, but only one champion walks away with up to 2 million naira in investment prizes. And you know, with Stambic IBTC Asset Management, nobody leaves empty-handed. Everyone's portfolio always grows. It is now time to meet today's financial gladiators. Come on now, let us see who is ready to make their money work for them.
My name is Calvin Ojeni, and I'm basically a tech bro. A random fact about myself: I enjoy the simple things and good quality content over, popular narratives.
I'm Elizabeth Onjoko. I'm a quality assurance specialist. A random fact about myself is that I'm a gym girl. I like to gym, so I don't look it, but yeah, that's the truth.
Hi, my name is Aziz Adejumo. I'm a tech founder and I'm a tech bro. A random fact about myself is sometimes I fake as if I'm calling just to get out of awkward situation.
Okay. Nice to see you guys, Aziz. You are competing with me in this suit department. I will collect your suit after now. Welcome, guys. This is now time for us to meet our expert from the Stambic IBTC Asset Management team, Abdullahi Famuyiwa.
Thank you, Jay. Hi, guys. How's it going?
Abdullahi, final episode of the season. Do you feel sad? I want to cry.
It's actually been an amazing experience. It's one that you wouldn't want to end, but what can we do about it?
What can we do? It's all right. You know what? Let us kick off with a rapid fire round. Now, this is where we separate the financial analysts from the financial amateurs. Now, each of you will have 1 minute to answer as many multiple choice questions as possible, and the contestant with the lowest points at the end goes home with an investment worth 50,000 naira. That's not bad. Now, guys, I want you to remember, every right move brings you nearer to claiming the ultimate prize. Calvin, are you ready to go?
Born ready.
Born ready. What do you do for a living again, Calvin?
I'm a tech bro.
You are a tech bro.
Yeah.
You are the only person I've seen in my life that accepted that I'm a tech bro. So what aspect of tech do you work in?
Mostly support and administration.
And administration. So a tech bro, so that means you have money. What are you doing here?
More money.
More money. Hands together for that now. Calvin, let us get right into your rapid fire round. Can I have 1 minute on the timer, please? Your time starts now. Which of these investment options is best for preserving capital and earning modest returns over a short period of time? A, buy shares in a technology startup. B, invest in treasury bills or short-term fixed deposit. C, put the money in cryptocurrency. D, buy land in the developing area.
B.
Correct. That should be done for a fund for risk-averse retirees during rising interest rates and volatile markets. A, move all assets to blue-chip stocks with good dividends. B, keep the current allocation and wait for rates to drop. C. Correct. Which of these should be considered before deciding to hold or sell a stock in a company facing financial challenges? A, whether the company has a realistic plan to reduce costs and manage, what did you say?
A.
Correct. What is the concern when a growing company reports negative cash flows from operations due to aggressive expansion? A, high retained earnings. B, excessive R&D spending. C, low revenue per employee. D, discrepancy between reported earnings and actual cash movement.
B.
Incorrect. If 500,000 naira is invested at an annual interest rate of 8% compounded annually, what will be the approximate value of the investment after 5 years? A, 680,244 naira. A, 700,000. C, also incorrect. Put yours together for Calvin now. After your rapid fire round, you have 30 points. Let us now talk to Abdul, our finance wisdom master. Talk to us, sir.
Thanks, Jay. And Calvin, you were not too time conscious. So I think if you make it to the next round, that's something that you should actually take into consideration. But I like your accuracy, just that you prioritize accuracy over speed. You should actually try to combine both. So for the last question, which you got wrongly, so I'll just try to give a bit of context to that. So usually there is a discrepancy between what you have as your cash flow from operations and what you have as your net profit for the year. Technically, they should be the same, but because of some certain accounting assumptions, especially the accrual concept of accounting, which says that you can recognize an income or even recognize an expense before cash is actually disbursed or received for it. But we have some companies that, because they want the books to look good, what they will try to do is to over-anticipate their earnings before they even earn it. Remember, the concept of accounting is you can recognize it after earning it, but not necessarily when cash is received for it. But you should not over-anticipate your revenue and in turn your profit. So when that happens, you would say that the company is aggressive, and that even widens the gap that you should normally see between your net profit and your cash flow from operations.
Thank you so much, Abdul. My people at home, you cannot come here and not learn something else. So thank you again, Abdul.
Okay.
Elizabeth, how are you doing?
I'm doing okay.
What do you do for a living again?
Quality assurance specialist.
Quality assurance specialist. So you are ready for us?
No, it's in health, not in finance.
Not. So you are telling me now that in case you don't get it,
Yes.
I should not blame you.
Yes, please.
I believe in you. I believe in you. I believe in you. Are you ready to play?
Yes, I am.
Okay, Elizabeth, can we have 1 minute on the timer, please? Your time starts now. Which type of list transfers ownership risk and rewards to the lessee? A, operating list. B, finance list. C, service list. D, rental agreement.
B.
Correct. Which of the following best describes double entry bookkeeping? A, every transaction affects at least 2 accounts with equal debt and credit. B, all transactions are recorded twice. B, incorrect. Working capital equals dash A, current assets equals current liabilities, total assets liabilities, equity long-term debt. C, cash plus receivable. Correct. Reinvestment risk refers to A, selling at a loss to invest elsewhere. B, risk at interest rates fall and coupons to reinvest at lower yields. Correct. In portfolio theory, what does the efficient frontier represent? A, the set of portfolios that maximize return for a given risk. B, the set of portfolios that maximize return. Incorrect. What is a perpetuity? A, fixed payment forever. B, granted graduate annuity for life. C, lump. Correct. What is currency carry trade? A, borrow low interest currency to invest in higher yield currency. B, hedge derivatives risk. C. Incorrect. Which of the following is the best option for so? I'm a quality assurance of easy health.
Easy health.
Easy health. But you have 40 points. I was expecting 0.
Those were some quality responses.
Those were some quality. I love that, Abdul. Talk to us.
All right. Very well done, Elizabeth.
Thank you.
I don't know, but you have beat our expectation. And I think you should actually believe more in yourself.
Yeah.
You came in with cold feet, I think based on Calvin's performance, but you should just be independent of everyone else's performance. So to the questions that you got wrongly, the first one, there is a primary principle of accounting. In fact, that is the most important principle of accounting. And that's the fact that for every credit entry, there must be a corresponding debit entry. So what is going out of your position is going into somebody else's position. So the question read, which of the following best describe double entry principle? That is, for every credit, there must be a corresponding debit.
All right, thank you so much, Abdul. And of course, thank you so much to Elizabeth as well. Mr. Aziz, how are you doing?
Great.
You're great. You're a tech founder, right?
Yeah, tech.
What does your company do?
We deploy AI products for churches.
You deploy AI products?
Yeah.
Nice. So you and the tech bro, what are you doing here now?
I want to use AI to solve this.
You want to use AI to solve the... If you fall my hand, after you've mentioned AI here. Right now, Kelvin has 30 points, Elizabeth has 40 points. Yeah. To make it to the next round, you have to beat Kelvin's 30 points. Are you up to the task?
Sure, 100.
All righty, can I have 1 minute on the timer, please? Mr. Aziz, your time starts now. The Lagos Clearing House is also a Dash Commodity Market, B Licensing Center, C Insurance Center, D Check Sorting Center.
Commodity Market, A.
Incorrect. Which type of credit allows consumers to borrow repeatedly up to a set limit as seen with credit cards? A. Installment credit. B. Collateral-based
Installment
credit.
credit.
What do you say?
Installment credit.
Incorrect. What is the main objective of cash discount? A. Encourage trade in receivables. B. Encourage bulk purchases. C. Encourage trade patronage. C.
Bulk purchases.
Incorrect. Which of the following is maximum loss an investor can incur on a derivative? A. Notional value. C. Local price value. C. Maximum drawdown. D. Strike price.
Strike price.
Incorrect. A dash is the original amount of money invested. A. Interest. Correct. Which of these institutions accepts deposits? A. Central bank. B. Insurance companies. C. Commercial banks.
Commercial banks.
Correct. Which insurance pays out beneficiaries upon the policyholder's death? A. Health insurance. B. Fire.
Life insurance.
Correct. Under what circumstance does an economic problem occur? Money is in short supply. B. Buyers and many. C. Sellers are few. D. Scarcity and choice are involved. What do you say?
Shall I help you?
Incorrect. Woo! Mr. Aziz, you made it to 30 points. Before we solve this equation that is about to happen here, let us speak to Mr. Abdul.
Thanks, Jay. And Aziz, I think I'll just flip what I told Calvin. You prioritized speed. Because if you look at all the questions that you got wrongly, elimination method would have solved everything correctly for you because there were 3 options that were absolutely wrong. And that's not the same for all the questions that we've seen so far. And I think case in point is going to be the question on the reason for discount. The primary reason for issuing discount is so that your customer makes payment early. It is not because of bulk purchase. So it's just so that your customers make payment early. And you have a host of other questions like that if you had taken a bit more time, you would not have answered as many questions, but you would have had more questions correctly.
Hands together for Abdul. As it stands, Elizabeth, you have already secured your place in the next round. Yes. But Calvin and Aziz, you'll be going head-to-head in the next round called the tiebreaker round. Are you both ready?
Yeah.
Yes.
Aziz, your voice is not shaking. This AI is not working.
Not working.
It's not. Let us get right into the tiebreaker question. I'll read out the rules to you. Here's how it's going to work. I'll ask a question, and the first one to hit the buzzer and give the correct answer secures their spot in the next round. So you have to be quick to hit the buzzer and give me the correct answer. Are you good to go?
Yes.
Calvin and Aziz, here comes your tiebreaker question. Which type of loan requires no collateral? A, secured loan. B, mortgage loan. C, credit card loan. Yes, Calvin.
Secure loan.
Incorrect, Aziz.
Mortgage loan.
Incorrect as well. Next question. Which of these is not a factor in determining risk tolerance? A, investment horizon. B, income level. C, health status.
Income level.
Yes, Calvin.
Health status.
Say that again.
Health status.
Health status, you've made it all the way to the next round. Calvin. Okay now, it's all right. Aziz, don't feel sad, you've done a great job. And the good thing is, the good people at Stambic IBTC Asset Management have said that nobody leaves here empty-handed. So in your investment portfolio, you have 50,000 naira. That's not bad. You can use it to do some more AI stuffs, right? Calvin and Elizabeth, it looks like you'll be joining me in the next round. Are your fingers quick?
Kind of.
Kind of. Elizabeth, kind of. Come, what about you? Yeah?
Okay.
I do like this, do like this. My people, you want to sit back and relax because it's about to get more intense in the next round. Don't move a muscle.
Money is ambitious, but haters will say money is proud.
Some say it's evil and dangerous.
Those who refuse to follow no road will say money is scarce.
Not just you.
Money is sweet.
Money is plenty. Money is the key, and you are the key holder because you know that investment is money's love language.
At Stambic IBTC Asset Management, we know money. We know where it grows, the language it speaks, and how to make it work for you. Invest for more with as low as 5,000 naira. Visit bluenest.stambicibtcassetmanagement.com or download the Stambic IBTC mobile app to get started today.
Move a muscle, and I'm glad that you stayed right there. You're still watching InvestBeta, brought to you by Stambic IBTC Asset Management. It's officially time for Quick Fingers. Now, Calvin and Elizabeth, pay rapt attention. Okay. I'll read out 15 questions in 3 sets of 5, and the first contestant to buzz in at the end of each question gets 10 points for a correct answer. If you get it wrong, your rival gets 3 seconds to swoop in to steal half the points. Now, if you both provide incorrect answers, the points go to no one. At the end of each set of 5 questions, we'll ask our finance expert, of course, Mr. Abdul from Stambic IBTC Asset Management, to provide context for some of the questions. At the end of all 15 questions, the market shall be closed, and the contestant with the slowest fingers will face a financial downturn, while the victor claims a guaranteed investment portfolio of 500,000 naira. It could be Calvin or it could be Elizabeth. Elizabeth, what makes you think you can win in this round?
Well, probably my gut feeling, because if it's knowledge of finance, I don't really have.
Hey.
But God is on my side.
God. Hey. Nigerians, you people, say God is on my side. Calvin, is God on your side?
I would say yes.
He's on your side?
Yeah.
I mean, he's at your back. Yeah.
He's right with me.
He's right? Okay, no problem. So are you ready for the first round of questions on Quick Fingers?
Yep.
Sure.
Alrighty, let's get right into it. How much should be invested today to grow 2 million naira in 18 years at 7% annual interest compounded annually? A, 591,446 naira. B, 650,000 naira. C, 700,000 naira. D, 750,000 naira. Yes, Elizabeth?
591.
Correct. If a company is promised 360,000 naira to be received in 3 years and the interest rate is 10% per year, what is the present value of that amount? 800. Yes, Calvin?
250.
250 is incorrect. Elizabeth?
27. Oh, the question has gone. 270.
Okay, correct. What kind of exchange is known as trade by barter? A, an exchange involving money and receipts. Yes, Calvin?
A direct swap of goods or services.
Correct. What is the future value of 42.5 million naira invested for 3 years at 15% annual interest compounded annually? A, 64.64 million. Yes, Elizabeth?
72.35.
Incorrect. Calvin?
64.64 million.
Correct. What is a zero coupon? A, pays no periodic coupons. B, has floating interest. C, yes, Elizabeth?
Periodic coupon.
Correct. Woo, come on now. Right now, Elizabeth has 25 points, while Calvin has 15 points. But listen, 2 more rounds to go. It can flip anyway. Okay, Abdul, talk to us.
Yeah, thank you very much, Jay. And I don't know if you guessed most of the answers, but that was spot on. So the session was focused on time value of money. So you're talking about what the value of your money is now relative to a value that you're expecting in the future, or what do you need to invest now to get a certain sum at a future date. So I think what you just need to do back end, right, is to be sure that you are getting the concepts correctly. Where you are compounding, you are not discounting, or where you're supposed to be discounting, you are not compounding. And I think you have a good grip of this.
Right. Thank you so much, Abdul. It is time to drop the next 5 questions for Quick Fingers. Are you both ready?
Yeah.
Okay, now. Let's go there. If a bond with a face value of 1,000 naira pays a 6% coupon annually and is currently priced at 950 naira, what is the current yield? A, 5. Yes, Elizabeth?
0.06.
What do you say?
0.06.
Incorrect. Calvin?
0.057.
Incorrect as well. Which efficiency level reflects predictable trends without arbitrage profit? A, weak form. B, semi-strong form. C, strong form. D, anomalous efficiency. Yes, Calvin?
Weak form.
Weak form. Correct. If an investment earns a nominal return of 12% in a year and the inflation rate is 7%, what is the approximate real rate of return? A, 4.67%, B, 5.00%, C, yes, Calvin?
0.0533.
Incorrect. Elizabeth?
0.05.
Incorrect as well. A bond paid at a 10% coupon rate last year, but inflation was 8.5%. What was the approximate real return? Yes, Calvin?
0.015.
Incorrect. Elizabeth?
0.02.
Incorrect as well. If a bond has a modified duration of 6 years and market interest rates rises by 0.5%, what is the approximate percentage change in the bond's price? A minus 3. Yes, Elizabeth?
Minus 3.00.
Correct. Okay now.
Yes, that would.
Ooh, Elizabeth, I just heard you whisper, I guess that one. Hey, God is on your side, dude. Calvin, call God from the back to your side. Oh, yeah, God. Right now, Calvin has 25 points, while Elizabeth has 35 points. Mr. Abdul, is this a guessing game or are they?
It is looking more like it, but well done all the same, Elizabeth. You've done really, really well. You have to understand that there are two categories of real return. There is an actual real return, and there is another one, which is the approximate real return. What you guys did is to compute the approximate real return, which is the difference between your nominal return and your inflation rate. However, to get your actual real return, it's a simple mathematics, but it's just saying that your investment is growing or your fund is growing at a certain rate. At the same time, it is diminishing at a particular rate, which is your inflation rate. So to get your actual real return, it's going to be 1 plus your nominal return divided by 1 plus inflation rate. We can take that class some other time.
Come on, hands together for Abdul. When you said it's simple maths, Calvin gave you one bad eye. Like, which kind of simple maths with that? Calvin and Elizabeth, this final round of quick fingers determines who makes it all the way to the final round, which is called the risk and reward round. Are you both ready?
Yep.
Yes.
If 2,000 is deposited annually for 6 years at an interest of 8%, what will be the total amount in there? Yes, Calvin?
14,672.
Correct. If a company has a P/E ratio of 20 and its earnings per share is 5 naira, what is its current stock price? A, 60 naira, B, 100 naira, C. Yes, Elizabeth?
100 naira.
Correct. Which of the following is true when a bond is trading at a discount? A, coupon rate, current field. Yes, Elizabeth?
Coupon rate, current field due to my maturity.
Correct. How much money do tax-free savings accounts in Nigeria allow investors to save annually without capital or returns being taxed? Yes, Elizabeth?
See, there's no actual limit. Eligible savings and interest are taxed.
Correct. If the coupon rate is constant, the value of a bond when close to maturity will be A, increasing without limits. Yes, Calvin?
Close to its face value.
Correct. Ooh, come on now. This final round, you didn't get, I mean, she said she didn't get this final. It's all right. Right now, Calvin has 45 points. And Elizabeth, who didn't get it, now has 65 points. Let us speak to Abdul.
That was awesome. And well done, Kelvin. At least you did not give up. And that showed in the last round. Well done. So I think the question that I would just like to buttress is the last one, which you got correctly, but just for the benefit of our viewers. If coupon rate is constant, the value of a bond close to maturity. So there is a concept in bond valuation that is called pull to par. So irrespective of the price at which an instrument is trading now, as the bond gets closer to maturity, it tracks its face value, which is called the pull to par effect.
All right, thank you so much, Abdul. Now we already know that the lady in red, Elizabeth, is joining me in the next round, where I will say goodbye to Calvin in this round. But the good thing is, you are getting 100,000 naira in your investment portfolio, Calvin. Congratulations to you, while the champion, the financial juggernaut herself, Elizabeth, now has 500,000 naira in her investment portfolio. We're going to find out if you're increasing that money or if you're reducing that money in a bit. My people at home, get ready to join the action. The entire nation can join our trading floor through InvestBeta home play. Here goes the question. will sit back and relax. It's about to be a show.
Money is ambitious, but haters will say money is proud.
Some say it's evil and dangerous.
Yeah, I found out. Those who refuse to follow no road will say money is scarce.
Not just you.
Money is sweet.
Money is plenty. Money is the key, and you are the key holder because you know that investment is money's love language.
At Stambic IBTC Asset Management, we know money. We know where it grows, the language it speaks, and how to make it work for you. Invest for more with as low as 5,000 Naira. Visit bluenest.stambicibtcassetmanagement.com or download the Stambic IBTC mobile app to get started today.
Excited but sad at the same time. We're back for the grand finale round in the grand finale of season 2. This is still InvestBeta by Stanbic IBTC Asset Management. And right now we have reached the moment that transforms good investors into great ones. This is risk and reward, the final round. However, how long this period will last is truly up to you, Lady Red Elizabeth. Okay. You can either walk away with a 500,000 Naira guaranteed investment prize you've already won, or risk some of that money for a chance to raise your winnings to an investment worth 2 million Naira. That's hefty, that's hefty. So here's the deal. We have 3 scenarios to test your knowledge of savings, investments, and risk analysis. Now, you will stake 100,000 Naira from your current winnings for each of the 3 questions. If you answer each question correctly, you will add 500,000 Naira to your guaranteed sum. Now, if you get it wrong, however, you will lose the 100,000 Naira stakes. Now, if you answer all 3 questions correctly, your money goes up all the way to 2 million Naira. That sounds good, right?
Yeah, right.
But if you lose all 3 questions, your money goes down to 200,000 Naira. Now, just like with any investment, there is an exit strategy. So at the end of every round, if you feel like your power no carry, you can choose to exit at that point. Elizabeth, do you understand the rules?
Yes, I do.
Are you ready to play risk and reward?
Very ready.
But of course, I have to ask you first, do you want to stake 100,000 Naira for this first question,
Yes,
or do you want to exit with your 500,000 Naira?
I'll stake 100,000 Naira.
You are staking, she's taking the 100,000 Naira. Let's go to our first question for risk and reward. In 2 periods, total cost amounts to 500,000 Naira and 400,000 Naira against production of 20,000 Naira and 15,000 units, respectively. What is the marginal cost per unit and fixed cost? A, marginal cost is 25 Naira, while the fixed cost is 50,000 Naira. B, marginal cost is 20 Naira, while fixed cost is 100,000 Naira. C, marginal cost is 15 Naira, while fixed cost is 150,000 Naira. And D, marginal cost is 30 Naira, while the fixed cost is 80,000 Naira. Elizabeth, you're playing for 1 million Naira. If you lose this, your portfolio goes down to 400,000 Naira. Elizabeth, I have to press you for an answer now.
Marginal cost is 25 and fixed cost is 50.
Marginal cost is 25 Naira and fixed cost is 50,000 Naira. Elizabeth, at some point you guessed, at some point you calculated well. Are you guessing at this point, or are you sure?
Not so sure though, but...
Not so sure? You're looking at Abdul. He's not giving you the answer.
I'm not looking at him.
All right, do you want us to lock that in, option A?
Yeah.
All right, locked in as your final answer, option A. Abdul, she has made it thus far. Did she get this question correct?
Okay. Let's see if your risk has ended its reward. This is a cost splitting question. you have total costs at 2 different levels of activity. And you have been asked to split those total costs into their fixed and variable components. One way to do that is to use the high and low method of cost accounting. Now, what does that mean? You are taking the difference between your total costs and you are dividing that by the difference in your level of activity. That is giving you a cost. What cost is it going to give you? I'll let you know. If you had gone through that process, your answer wouldn't be option D, because you would have been wrong. If you had gone through the process, your answer would not be option A, because the only right answer to the question is option B.
Option B. Elizabeth, you got that one wrong. Your portfolio has gone down to 400,000 naira. That risk did not reward you in this round. How are you feeling?
Well, good.
Good. Why good?
Well, I just wanted to come here and test my knowledge, so it's
yes.
fine.
So you're testing your knowledge. If the money comes, good. Yeah. If it doesn't come, it's all good.
Cool.
So I have to ask you, do you want to test your knowledge again in the next round?
Yes.
Or do you want to exit?
Let's play.
You want to play?
Yep.
Elizabeth wants to play. Okay. Here comes your second question for risk and reward. You are now playing for 900,000 naira. You want stable, moderate returns with lower risk over the next 5 years to help pay for your child's education. Which investment option aligns best with this goal? A, high growth technology startups. B, investing in art and collectibles. C,
D,
day trading in foreign exchange markets. And D, government bonds and diversified fixed income mutual funds.
And diversified fixed
Option D. Do you want to tell me why you're going option D?
Because it's 5 years, so that's kind of a long time. So government bonds gives low risks and interest will increase with time. And also you diversify the fixed income into mutual funds, so you spread it. So you have less risks and high interest at the end.
All right, let's find out from Abdul.
Elizabeth, I don't quite agree with your premise, but let's see how your answer does. Option A, investing in high growth technology startups. That is long term, which is also in line with your 5-year outlook. However, it is not in line with your risk appetite because that is classified as a high risk investment. So the answer is not option A. Option B, investing in arts and collectibles. Those have perceived value. You don't want to tie your child's education to that. So option B is obviously wrong. Now we're left with options C and D. For option C, you stand to gain a lot because of the volatilities of the exchange market. However, there is no limit to how much you can lose as well. Now, in the context of this question, what is suitable for your investment objective is not option C, but option D.
Option D! Our lady in red has gotten her portfolio up to 900,000 naira. She was pretty confident there. So I'm sure when Abdul was talking, we were like, oh, guy, don't get that. Oh, guy, know this trace, have you? 900K is not bad.
Yeah.
900K is not bad. Do you want to exit now or do you want to answer one more?
I always finish, so let's finish.
You always finish. She always finishes. I love that. Let's go straight to the final question for risk and reward. Remember, you're playing for 1.4 million naira. If you lose this, your money goes down to 800,000 naira. You're analyzing a company with low debt and high equity. However, its return on equity is significantly below industry average despite solid profit. What could be the most likely explanation? A, an inefficient capital structure with too much equity. Option B, excessive dividend payments. Option C, overstated liabilities. And option D, understated asset turnover. It's a bit more delicate than the former question.
Yeah. A, an inefficient capital structure with too much equity.
Why do you say so?
I feel if they don't have an efficient structure, it would have led to the low debt and high equity. And when the equity is too much, probably relate with the high equity too. So that's why I chose my answer.
Are you sure?
Yeah.
I saw that while you were answering my question, you were looking at the other options again to be sure. So I'll give you another second to lock that in. Do you want to lock that in? You're our final contestant of the season. Do you want to lock that in as your final answer?
Yes.
All right, there's nothing I can do at this point, Elizabeth. You've locked that in. Abdul, up to you, man.
First, I would like to commend your courage. You got the first question in this round wrongly, and you still wanted to see it to the end. That takes courage. I would have taken my money and left. But now to the business of the minute. All the options in the question could be explained in one way, shape, or form to be the correct answer. And I could sense that you felt that too. However, there is only one right answer. The right answer is not option B, because dividend is after the return that we are talking about. In fact, dividend is a part of the return. The answer is not option D, because turnover, asset turnover, relates with your assets and your revenue, nothing to do with return. That leaves us with options A and option C. And Elizabeth, irrespective of how this ends, be sure that you've added value, not just to yourself, but to our viewers at large. And on that note, I would like to tell you that if you had picked option C, you would have been wrong. Option A is correct.
Elizabeth, congratulations. How are you feeling right now?
Excited.
Excited. Did you think you were going to make it this far?
I didn't think so. I'm going to lie.
You just came here to test your knowledge. You can't chop money. Hey, Elizabeth, see me after now. You can let like 15% from there. Massive respect to Elizabeth, and of course, a big appreciation to Abdullahi Famuyiwa from the Stambic IBTC Asset Management Team. This was a fantastic season. Dare I say, this was the season of the women. The women came through hard this season. What a spectacular financial adventure. We've witnessed incredible highs and some devastating lows, and everything the market can throw at brave investors just like Elizabeth. A special shout out to Stambic IBTC Asset Management, the leading investment company in Nigeria with 2.6 trillion naira assets under management. Remember, it is not too late to start your journey with investment with as little as 5,000 100,000 naira. All you need to do, I've said it on the other episodes, I need to say it again, simply visit the URL or call the number on the screen to get started. You can also scan the QR code right now to begin. Don't forget to push your subscribe button right now and expect us next season. I am Johnny, and trust me when I say, hey, the next season, oh my body gun, it's gonna be spectacular. Keep building those portfolios and keep believing in your financial dreams. Until next season, stay profitable. Bye for now, people.
The game was quite tough, especially with the mathematics aspects, considering the fact that I don't have any financial knowledge and I'm not in that field. But I gave it my best shot, yeah. The questions I had difficulty answering were the ones relating with bonds, the calculation aspects, whereby marginal constant, all of that. I feel so excited. I didn't expect I was going to win, but I'm glad I sticked it out and I won. One financial advice I'll give to myself is to always invest. The earlier you start, the better. No matter how little you're earning, put something into your investment portfolio and watch it grow. Then you can retire early and enjoy for the rest of your life.